So what you're seeing on the old screen here, I got the S&P futures with the little Fibonacci, the little jobby thing going on here. We, of course, had this nice little sell-off into the middle of the March here, and they've had this nice little ricochet up. They came up and tested this 38.2 area, and now they've come back down to the 23.6, and they tagged it today. And now we're trying to figure out what we're going to be doing next. So right now, we're just kind of caught in here a little bit. More than likely, the markets are, uh, one thing I would like to happen, let me just say it this way. If we can close above this little high here, which basically is above 58.37. We'll probably go up and test this 50% line, which is basically sitting just shy of 5,900. So, and that's where I think really the rubber is going to meet the road. Do they really want this thing to be a lot more positive, or do they want it to, stay down because of, whatever else is going on? And that's the biggest thing that I'm kind of watching for right now. Right now, this rally's a little bit suspect, just because it didn't quite make it to 50%, and now we're pulled back down to this 23.6% area. So they start closing below 57 10. We might just come back down to 56.50 and then maybe back down to the lows. Who knows? But anyway, right now, I'd still be a little bit cautious on the long side, longer term. And you really think about tomorrow. Tomorrow we got the PCE coming out, which is one of the big, indicators or economic uh, indicators that the Fed looks at. And it's basically personal income and spending, and they want to kind of see, what wages are like, what people are bringing in, what they're spending. Are they spending more than they're making, or vice versa? Are they making more than they're spending? If they're making more than they're spending, usually the economy slows down, so on and so forth. Retail sales came in, and they were still pretty good. Even durable goods orders came in this week, and they were kind of robust, if you will. They were above expectations. So it sounds to me like people are still spending. Now, I guess we'll get those numbers tomorrow just to figure out exactly what's going on. But I think that's going to kind of set us up to where we're going to be going in April. Um, and I've talked about in here, I'll get rid of all this stuff here. Um, ah, guess I didn't do that very good. There we go. About there we go. Good old copper here. Copper's had this nice little spike up. And I thought finally we've broken above 515, and here we go. And now we're down below 515. We had the news come out on the tariffs, and I've mentioned this before. They're putting out tariffs on all the copper and copper byproducts and everything like that, but they were giving them 270 days, which basically is what, October or whatever it is. Well, they came out this week and said, nah, we're shortening that up to May. And all of a sudden, copper spiked up big time. And so it finally jumped up, went up to that 537 there. And then everybody started figuring out, wait a second here. So what's really going to happen? And so it's basically an inventory thing. I guess it is supply. Let me put it that way, a supply thing, where now they have a much shorter time period to import as much copper as they can. We've had huge copper imports. All right. Usually we get somewhere between 60 to 70 kilotons of copper in to the United States imported in per month. And in the past month, we've had 200 kilotons. So you can see we've got these huge imports coming in just to, get in front of these tariffs. And so they were thinking that, hey, the supply chain around the world is going to get really thin with everybody importing into the U.S. U.S. is going to have a huge supply. But it's going to hurt China. It's going to hurt a lot of other places. And we're going to have actually a shortage, over the rest of the world. Well, that's looking out going into October. Now, all of a sudden, we got a month. And so you can't bring in a whole bunch more, maybe another 200 kilotons, right, in a month, and all of a sudden, then we're going to have, these tariffs coming out. So today, because of that, they're going to say, well, the global supply is not going to be that bad, and poof, we've had copper correct back down a little bit. So that's that's the thing that you're kind of seeing in this market. I mean, things will get volatile and move off of news, and that's just kind of what happens. And so, and a lot of people got worried about what gold was doing. Uh, Boom, there it is. Um, and so gold is up here right now, hitting 3,100, hit 3,102 today. So even though everybody was saying, hey, gold's correcting back, nah, gold's not really correcting back. It just, goes up and pulls back and goes up and pulls back and goes up and pulls back, and that's just what it does. Now that we've hit 3,100, though, do we get another pullback? Um, so, um, well, I mean, that's a good question, Joe. Joe's asking, how does this affect FCX on the copper side of things? Well, I mean, you have to also remember this. FCX is a company, it's got a CEO, it's got earnings, right? So even though it's going to move along with copper, I mean, you see copper that was down like 2% or 2.1% or whatever today. FCX was actually down 2.4, 2.5%. So, and if you also go back a little bit in time, copper was up there hitting $50. It's down here at $41, where copper is making a new all-time high. So they don't necessarily go step for step with each other. All right. And that's the one thing you always have to beware of when you look at those kind of things is, this usually goes along with it. Why not doing it now? Well, maybe they screwed up on their production or whatever it was. Um, so you do have to be wary about that. I mean, it's not bad to sit there and go, I'm watching copper, I'll buy FCX. There it is. And I would probably almost say that it's got a pretty good, I don't know, might want to say 80, 85% correlation to copper. But the other little bit is going to be just company news. They might be buying somebody out. They might be, drilling a new mine and didn't produce. I mean, that's the biggest thing when you have these companies. So, but as far as the tariff impact, um, it might hurt FCX quite a bit, just because they are a global mining company. They're not just here in the United States, of course. And you know, and just listening, and this is a thing that I don't know how it pans out, and this is what I've been trying to figure out. Trump has come out and said, okay, 25% tariffs on all the cars unless you produce that car here in the United States. Well, okay. Well, Hyundai is just north of me here in Montgomery, Alabama, and there's actually a Mercedes plant that's just north of that, just out, literally between Birmingham and Tuscaloosa. There's a Mercedes plant. Well, those cars are being made here, so do all the Mercedes coming in from Europe not get tariffs now? Because they're being made here, right? So that's what I'm trying to figure out is, who's getting tariffed and who's not. And it's the same thing. If you have Freeport McMoran, now does that just say, well, since we're a copper company here in the United States, do all of our imports not get tariffed? Well, that's a valid question. And they haven't answered that, or I can't figure out where they've answered it. Let me say it that way. So, and that's what I've been trying to figure out is who's getting thumped on the head and who's not. And I mean, they don't make BMWs here as far as I know. So all those are going to be tariffed up and all that stuff. So that's the one thing that I know that is might be hurting, but I don't know how they're actually going to be doing that. And they haven't literally said, and I'm sure it'll come out sooner or later. Hey, these are made here. They're not getting tariffed. These aren't made here. There it is. And they'll probably define that much better. And that might be why you see so much weird volatility in the market. I mean, you look at what the indexes did this morning. They opened up, they nosedived in the first 30 minutes. I mean, they were just dying off and dying off. And all of a sudden they said, okay, that's enough. And they flipped it right back around and started making new highs. It's just like, alrighty, what kind of crack are we going to be taking today? So, but it came down to that 23.6% retracement, and now it's kind of bouncing back up. Maybe that's exactly what they were looking for, where all the algos were out there saying, hey, we've hit here, this is a good place to buy, and they jumped on it. And that's the one thing you really have to be careful of in the market is there's going to be turning points on the upside or downside, doesn't really matter. And you almost have to be ready for that. I mean, the markets are really, really pretty volatile. I mean, the S&P right now is moving 140 points in a day, where it normally runs around 60 or 70 points in a day. So it's almost twice as volatile as it normally is. And when you have twice the volatility, you have twice the risk. Think about it. And so you have to be very, very cautious in what you're clicking on and what you're buying and what you're not buying. And so that's the biggest thing that I'd kind of be watching for is just, let the tariffs hit next week before trying to figure out, okay, I'm going to try to buy this or sell this and kind of go from there. Another thing that we have coming out, which unless you're kind of in a rural area, probably really don't care about it a whole lot, but I'm just going to throw a stock in here. And in fact, I'll pull up two charts here just real quickly. Hold on. So there we go. This is ConAgra on the left, and this is General Mills on the right. And you'll notice they both had this little spike right over in here. That was kind of twofold. One, that was World Ag Supply that came out. And number two is this is when the tariff talk really started getting going and everything like that. And we also had some reports that, and actually it's almost been founded to be true, that we're not having a very good crop down in Brazil and stuff like that. So they're actually starting to try to start importing our corn, which is unusual because they're the second world's largest corn exporter. We're the first world largest exporter in corn, and now they're starting to buy corn from us because they don't have enough. We actually export probably I'd say somewhere around I'd say 70%, 65, 70% of our corn. Um, but they basically export, 90, 95% of their corn. They don't have the storage that we have. And since they produce so much, they really don't need all the storage, I guess. And lo and behold, well, they're running a little bit low, so they're starting to buy our corn, which is kind of crazy. But anyhow, that being said, I think on Monday we're going to have a thing called prospective plantings. Now, if you just sit back and think about it logically, it's kind of a bogus report. There it is. But it's not. It's a huge thing. It's a survey. They actually survey all the farmers that are out there, whoever answers the survey, and says, what you planting this year? And how many acres are you going to do? And basically that's the survey. And right now, they're thinking that we're going to have a huge decline in soybean and a big increase in corn production or growing. And so, how those are actually going to balance out, I mean, they're looking at like a 20-25% decline in the amount of soybeans being planted compared to corn, and corn's actually increasing about the same amount. So, a lot of people are going over to the corn instead of soybeans and so on and so forth. So, I want to see what that does. And I think these two are going to probably be reacting off of that, based off of that. Also, the next day, what happens? Well, I guess what is it, Wednesday? Wednesday, then we get the tariffs, right? So, and how those tariffs are spewed out, to whom, to what, to whatever it is. I think we're going to get some volatility out of these two stocks. Now, if ConAgra can get back above 26 and a half, 27 bucks, it's probably going to be a decent buy. Same thing with General Mills. It really needs to get back above about 61 and a half to be a good buy. If it's on the negative side, we get back below 25 bucks on ConAgra, or start breaking below $58, whatever, 57 and a half on General Mills, might end up being a decent short. So I think these two are kind of the two to kind of watch off of that ag news, coupled with the tariffs that are going to be kind of spun out there, just to kind of see what really is going to be hitting the worst. And I'm sure it's going to be hitting the news, and who's getting tariffed and who's not getting tariffed. And, and people around the world are going to complain and gripe and gritch and all that good stuff. That's just the way it's going to be. I can't change it. So we just have to call it for what it is and deal with it. And the market's going to do the same thing. It'll call it what it is and start dealing with it. And there it is. We'll just kind of deal with it as we can. So, but that's the big thing is you'll see these two stocks move around a lot based off that. You can see those big gap downs at the end of February. Um, that's when Trump was elected, and that's when, oh, here come the tariffs, right? Or actually, he was sworn in on that day. So they kind of gapped down and off they went. Well, of course, a lot of the markets did that. And so it's just going to be a really interesting week next week, as far as the grain markets and the tariffs coming in and all that good stuff. And I think it's best just to kind of keep your powder dry. Don't put a whole lot into the market and let Wednesday occur and see how the market's going to react to it. Oh, what are those levels again? On ConAgra, I was thinking if we can get probably above, 27 bucks, at least 26 and a half, 27 bucks in there somewhere. We're real close to that. You can kind of see both of these things are up today. And I think they're trying to lead into exactly what we're talking about. But I'd really like to see General Mills back above 61 and a half on the upside. So, like I said, it's something to look at. I'm not going to buy them right now just because we're right in front of the news. I'm not going to just guess and see which way they're going to go. Um, to the downside, we really need to get back below probably 25 on ConAgra and get below 57 and a half on General Mills, and we'll probably see that start pulling down a little bit. So, but that's, I mean, you can kind of see how volatile they've been just because of all the tariffs and stuff. If you're talking about a $26 stock has gone from 23 to 28 and back and forth and right and left. I mean, so you can see just on a small stock, I mean, a cheap stock, it's still going to move around a lot. And but you'll see these things move a lot based off that ag news and stuff like that. A lot of people just kind of throw them in the trash can. But I watch them a lot just because I watch the ag news and stuff like that. And you can kind of see what they did around World Ag Supply, and they jump around. I mean, you got to be real fast with them sometime. But anyway, they're kind of fun to watch. So, um, someone's asking when I'm putting out my the gold trades today. We'll be doing that after we're done here. I'll put that out right around 2 o'clock or so. Um, just kind of watching what gold's been doing. They sold it off early this morning. I was really busy this morning, and I thought, well, they'll probably hit 30.75 before they move this thing back up. And I think that got down to like 30.72, and here they back are up here hitting 3,100. So that's just what it does. First thing in the morning when the U.S. sees it, they're like, sell it. Then they flip back around and buy it after they kind of get everybody worried and get them out of the market. And that's just how the gold traders trade. So everybody gets all worried about, hey, we're down here now. And then they turn around 2 days later and it's a whole lot higher. Um, yeah, we can start looking at those. I'm really wanting to, now that they got everybody in there, I want to see exactly what the policies are. They haven't really put out any policies. The only thing that I've been hearing is everybody's getting fired. Even RFK came out today saying he's getting rid of 10,000 people. Well, there's another 10,000. Um, so I really hadn't seen any policies coming out yet on nuclear or energy. Even though I've heard drill baby drill. I haven't seen anything come out. I mean, they are killing regulation. I think they are, and they've made some executive orders and stuff like that. But I hadn't seen anything, you know, putting tires on the ground and start moving. So until I that happens, again, especially on the nuclear side of things, I want to make sure that hey, they are kind of gung ho on that, and so they're really going to start pumping in the uranium into the United States and buying it up around the world. And if that's one thing that I think what Trump was trying to do is get the minerals over there in Ukraine so we can get the uranium, but and cobalt and stuff like that. So, um, but apparently that's not going to happen. So we'll see how that pans out. and see who wants to do what where. Um, I'm just as patient as a snake. I will sit and watch and wait and strike when it happens. So, uh, well, the thing is, I mean, the the oil market. We're in a weird time right now. I mean, everybody wants things to move instantly. You're in a very, very strange time right now. You've got tariffs coming out. You got everybody trying to figure out what's going on. And I mean, why put your money at risk? I mean, I mean, that's the thing. I'm not going to put people's money at risk. If I mean, you looked at what crude oil is doing. Crude oil had this nice run up to $70, and look where it is now. It's not at $70 anymore. It's back down again. Um, and that's the thing you just have to be patient with. You let everything pan out a little bit. And I've warned everybody about this back in December and January. It's going to be a real weird first quarter, and it is. It's all over the place. So don't be too anxious to jump into the market. Let the market tell you when it's going up. Let the market tell you when it's going down. Don't try to guess it, and don't just try to force it either. Forcing a trade never works out. And I'm not going to force anything in this market if the market can't figure it out, then I'm not smarter than the market. Sorry. I mean, you can call me dumb as a post if you want to, but I'm not going to trade this thing if it's not telling you anything. And that's the biggest thing. Let the market say, hey, we're moving up. Let the market say, hey, we're moving down. We retraced. Yeah, we did. We bounced up. That's, but look where we came from. We hadn't even gone up half the distance, and everybody says, "Hey, we're in this huge rally right now." Are we really? I mean, it's a bounce. Okay. So if you bought it down here and you're up here, you're doing okay. But if you didn't buy it here and you bought it here thinking we're going to go up, now you're not doing so good. So let's let the market say we're up and let's let the market say we're down. So just be just a little patient. That's all I'm saying. Yeah, but let's just be patient and let's let the market kind of figure it out. Like I said, we've got a lot of uncertainty still, and you read the news. I mean, I get the CEO journal or the CFO journal, sorry, um, as well as the Wall Street Journal, and you got to listen to those guys, man. They're about to pull their hair out. And every time I read it, I always kind of laugh at them. I was just like, well, yeah, welcome to our world. Try to trade in the market. Um, so, but yeah, but I mean, it is. I think everybody's kind of, cats on a wire right now trying to figure out exactly what this market's going to do. And I certainly wish I had a crystal ball, but I don't. I think and this is kind of how things usually go. There's a whole lot of volatility in the market when there's a lot of uncertainty. There it is. When everything starts chilling out and everybody knows what's going to be going on and how everything is going to be going, you'll see the markets calm down a little bit and have better trends. Um, I mean, you look at today, I mean, like I said, they were tanking this market off right at the open, only to turn around and make new highs. I mean, talk about real fickle. It's just what to trade on a whim next kind of thing. And I think when you have markets like that, it's always best to kind of step back and say, I'll let everybody else get chewed up and I'm going to preserve what I've got and and have money ready to when this thing really does move. Does it move down or move up? I don't care. But we'll load up at that point in time. But I think that's one thing, and people this it worries people, and I'm not going to disagree with that. But I think being patient is probably a lot better unless you're a day trader, don't get me wrong. If you're a day trader, great markets to trade in. But if you're getting something more on a swing type trade and a longer term trade, it's kind of dangerous. It is kind of dangerous. And that's kind of what we see. You can be long one day and short the next day, and long the next day and short the next day, and go, well, market hadn't gone anywhere, but if I day trading, you're doing all right. So, and even you look at how just the indexes have been moving together, kind of weird also. You'll see starting out the day that you'll have the S&P and the NASDAQ up and the Dow and the Russell down. And then all of a sudden, everybody goes down, and then you'll see the ones that were really weak flip around and start making new highs, and then the other ones will go, oh, okay, so you really did want to go, and then they'll turn around, and it's just kind of strange. You'll have divergence in the markets between the Dow and the small caps against of course, the S&P and the Nasdaq are a lot alike, just because most of the stocks in the Nasdaq are in the S&P 500. Of course, all the stocks in the Dow are in the S&P 500, right? So, but that's the thing, and you'll see some divergence between those instead of all the indexes moving together. So if all of them are moving together, the economy's healthy. If all of them are just divergent everywhere, everybody's trying to figure out, well, do I buy these and sell those, or sell these and buy these? And what's kind of strange is you got the small caps and the blue chips in the Dow moving together. All right. Then you got the Nasdaq and the S&P moving together. And that's kind of what we've been seeing over the past couple of weeks, that they go opposite directions and then they kind of figure out, hey, we're all going to go in this direction. But you look at like yesterday the Nasdaq and the S&P, even the Russell were just getting killed, and the Dow was like, what are you all doing? And it stayed up. And finally they turned back around and they all went back up. I mean, it's just kind of a strange market how things are doing. And when I see that, I always kind of step back and take a deep breath and go, okay, let's let somebody else's money figure it out. So, but I mean, you always have to try to make a decision. Where's best to put my money? I mean, right now, throw it in gold, leave it in gold and silver. I mean, silver got back above 35 bucks. Um, and just leave it in gold and silver for right now, and just, close your eyes when it kind of corrects a little bit, because it's going to turn back around and go right back up again. And that's just, I mean, gold's on a tear, and I don't see anything trying to stop it. And I haven't found anybody yet said it's going to stop because of. Everybody's saying buy gold. There it is. Stay with that one. So, but and Donna, that's true. I mean, a lot of people say that. Of course, you hear she's saying this shows how manipulated the market is. And that's the one thing. The Dow, of all of them, the Dow can probably be the most manipulated, just because it's all price weighted. It's not market cap weighted like the S&P and the Nasdaq and the Russell and any other index that's out there. It's price weighted. The most expensive stock in the Dow is what moves it the most. And so you could have and I'm just going to make an exaggeration here. You've heard me talk about Berna and stuff like that. Byrna's a $200 million company. Well, if its stock price was 700 bucks and they threw it in the Dow, it'd be the largest mover of the Dow. It doesn't care what Johnson and Johnson and J.P. Morgan and Disney and Microsoft and all those guys wouldn't care at all. It'd be watching Byrna only, just because it's the most expensive stock in the Dow. And I think that's where it hurts itself, because you've got Goldman Sachs, United Healthcare, Microsoft, Home Depot, and Verizon. I think those are your top five in the Dow. Those are your top five in the Dow. Where they go, that's where the Dow is going to go, because they're your most expensive stocks. And not to say that, no, that's a bad group, don't get me wrong, but it's not based off market cap and weighting and stuff like that. It's just price and whatever your price is. And that's why they threw Intel out of it. Intel's a huge company. It's really huge. Yet their stock price is only down at 21 bucks. And that's not a very big stock price to be in the Dow. Alcoa was the same way when they took it out. It was down at 20 bucks and they took it out. It's a huge company, but the stock price is real cheap. And in the Dow, you got to have a decent stock price to be in it. And that's why they take them out of the Dow, just because of stock price. It's not moving the Dow hardly at all because it's so cheap. So anyway, and it's not the size of the company, it's just the stock price itself. And so it's probably the most manipulated, because you can buy 4 or 5 of those stocks and move that Dow wherever you wanted to. No, 4 or 5 stocks in the S&P, maybe. you can move it a point or two, not a couple of 100 points like in the Dow. So, but yes, I mean, things can get moved around where the traders want them to go because it's getting traded that way. And money moves the market, and a lot of times they can move it where they want it to. So, and of course, the news people don't like to hear that, but it's actually pretty true. But we have to trade it, so we have to find out what those trends are. So, and I guess I'll get off my soapbox now. Sorry about that. But yes, I think just being patient a little bit. And but on no in the energy program, I mean, I watch the energy markets. I watch the gold markets all the time. Um, and right now gold's the one to be in, and crude, I mean, on a weekly basis, we can do great in EIT, selling spreads and stuff like that. And we're doing really well in that program. But on a longer term basis, it's really hard to sit there and say, hey, let's just jump into, URA or USO or anything like that, or EUC or anything, and saying giddy up and go, just because there's too much uncertainty right here um, on the horizon. But we'll get past it. We will, and we will get things back to a little bit more normal, quote unquote, and start seeing what the trends are. So, and I think it's a great market for learning. It is. It's a very, very good market for learning. They give you a lot of different numbers and things like that that they're looking at as far as support and resistance, and we get to see how markets react to specific newses. And it's always been funny to me to see good economic news and the market sells off, and bad economic news and the market rallies. When everybody's been taught and seen for 50, 100 years that good economic news market goes up and bad economic news market goes down, right? And yet you'll see the total opposite of that. And it's all because of what the Fed's going to do in interest rates and stuff like that. It's almost like the market wants a recession because then the Fed will cut rates and then the market will be all happy. Well, I don't think the market wants a recession because nobody's going to buy anything. So that just is counterintuitive to me, but that's just the way the market reacts right now. I always thought that was just kind of funny that they'll do total opposite of what the news is, or they'll go right along with what the news is saying. So, and you have to be very, very careful and kind of watch to see how the market does. So it's kind of fun to watch and good to learn. So, but anyway. So, 410 for the next 12x. No, it'll be 48 um on that one, Joe. It should be 48. Question on your trade of the day, COPX. Got in $1.85, down about 34%. I'm still in that, Donna. I'm with you on that. I still think copper's moving up, and I think it'll continue to move on up. And I would have just done an outright call, but they were just a little expensive. Um, and I didn't think a lot of people would like that, so I just went ahead and did the spread itself. So, but yep, I'm still in it. We're gonna be all right. We'll be fine. Panama Canal stocks. Woo. I would you might look at the shipping companies. What is it? ZIM? Doug? You might see what based off of that, you might kind of watch the some of those ship. There's another one. I can't remember the dead symbol on it. Dang it. It's right on the edge of my head. But Zim's a good one. Um uh oh, what is the name of the other one? I can't think of it. When I think of it, we'll talk about it next week, I guess. Um, but anyway, but yeah, look at the shipping stocks. I think those would probably be your best ones for as far as the Panama Canal. And the one question I would have more than anything, um, right now containers are still very expensive for shipping around the world, just because of the Red Sea and all that Suez Canal. all that stuff is still kind of in a questionable area. So things are getting pretty expensive, as far as shipping and everything like that. And now some of them are just saying the heck with it. We'll just go the long way around, Africa or whatever it is. And that takes a lot more time and a lot more money. So they're charging a whole lot more for, the shipping containers or per container and everything like that. Um, if Another problem that the Panama Canal has, uh, is water. They keep there's some lakes there that they use for the locks, and since they've had some droughts and everything like that, they don't have as much water in there, so you have to actually decrease your shipping uh, weight, I guess your displacement by about 20% to get through the locks. So the question is can they get some more water in the ponds? And of course, they're really lakes. But if they can get some more water in the ponds and kind of help that out a little bit, that'd be really nice. They've got a couple of little issues down there, but right now, I think they're just trying to take it over a little bit and have us control it as opposed to China controlling it. So, and we'll see if that pans out just fine and dandy too. So, but yeah, their biggest problem down there is water right now. So, alrighty. Oh my goodness, we've been going almost 40 minutes here. So, well, with that, we'll kind of round out this session. We'll come back next week and kind of see where things are at, see what the tariffs are doing, see how the prospective plannings kind of went and stuff like that, and kind of see what these two stocks have done. So, but thanks for tuning in today. I thank you all for hanging in there, and we'll be patient and we will rock and roll from there. So, but thanks.